Well, hello and welcome to this Moneycontrol live stream. It's a Wednesday morning and you're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, stocks in focus, including Bharti Airtel and Jubilant Food, and a whole host of other stocks that are making news at this hour. And of course, if you have any stock-related queries, send them in to us on our YouTube feed, and we will have them addressed live by our expert on the show. But before we do all that, let's take a look at the top headlines at this hour. US President Joe Biden holds a second congressional meet over raising the debt ceiling with some progress in negotiations. Wall Street ends lower on concerns of a potential default. The Dow ends below its 50-day moving average for the first time since March, and mixed retail sales data for April also dents sentiment on Wall Street. Asian markets open mixed. The Nikkei edges higher after strong GDP data, but the SGX Nifty is indicating a lower start for the Indian market. Crude dips on weaker than expected economic data in China, even as the International Energy Agency forecasts higher global demand for 2023. Gold slipped below the $2,000 an ounce mark as hawkish remarks from the Fed and economic data signal delayed rate cuts. Bharti Airtel's fourth quarter revenue misses estimates, but margin expands against expectations of a decline. Average revenue per user is flat, while sequential subscriber growth is strong with the addition of over 3 million customers. Meanwhile, watch out for Jubilant Food as it reports its earnings today. Well, let's take stock of what's happening globally. And, my guest today is Peter Cardillo, who's the chief market economist at Spartan Capital, joining in this morning live, from the United States. Hi, good morning, Peter. Good to have you on the show. First of all, Biden and House Speaker Kevin McCarthy have, been in a huddle of sorts and are hopeful of reaching a deal. But if a deal doesn't materialize soon, looks like the U.S. economy would be staring at a catastrophe of sorts. What will be the implications if U.S. defaults for the first time ever? A hard landing for the U.S. economy?
Well, let's start by saying there will be no default. And the meeting that took place today between Biden and the Republicans, McCarthy and Mitch McConnell, basically offered a glimmer of hope. In fact, McCarthy said that there was a possibility that we could have a deal by the end of the week. And of course, he also said that we're far apart. And, I really don't believe that the markets are really that concerned. Yes, there is somewhat an element of worry, but very, very minimal. And I think, if there was real concern that no deal would be reached, that, you would see a different market altogether. Certainly, you wouldn't see gold at 2,000, under 2,000. You would see it close to 4,000. You would see the price of oil down to $30 or $20 a barrel. You see the stock market falling apart, and you would see yields rising rapidly. So there is really no fear in the market. The market always has to worry about something, and it's just like an excuse right now. Earnings season is winding down, and so we need a new catalyst. And I think that's the real reason, why we're seeing this range-bound market. If you really analyze what's happening, stocks are caught in a tight trading range. We're not going higher, and we're not going lower.
Right, stocks are pretty much range-bound. In fact, Dow, as I mentioned, has slipped below that 50 DMA, for the first time since March. But, investors, are already concerned that the Fed has been raising rates. Of course, the rates are now, terminal rates rather, now hovering around that 2.25% mark. But based on the last monetary policy, do you think that there is a case for a pause in June, given the fact that there was indication from Powell that, they may look at, holding fire in the wake of the kind of data that comes in here on. So what are your expectations? A pause in June and maybe rate cuts starting in November or December this year?
I don't see any rate cuts coming this year. I think there'll be rate cuts coming in the first quarter of 2024. I do believe we're headed for a mild recession, and I think that the Fed is not likely to raise rates next month. However, if you looked at some of the data that came out yesterday, obviously it was somewhat mixed. You saw the housing confidence climb back into positive territory. You saw retail sales that came in, but that came in a little bit lower than expectations. But there was also a revision, which indicates that the sales are really not that strong, and it indicates that the consumer is beginning to pull back. So we can go on and on, and the data remains mixed. The key is, of course, inflation, and inflation is headed in the right direction. If you look year to year, inflation it's continuing to move in the right direction. Of course, on a monthly basis and on a yearly basis, it remains elevated. But I was just looking at some of one of the reasons why we have the transitory inflation that remained elevated and actually went up a bit was due to egg prices, and now they've come down. So I think as we move closer towards the mild recession, that inflation, that is the transitory inflation, will continue to work its way lower. Look at energy prices. Crude oil seems to be stuck here. I don't think it goes lower from here, but I don't think it goes much higher. And so, there are some components where inflation remains sticky, but in general, I think it's headed lower.
Right, inflation headed lower. At this current juncture, it's hovering around that 5% mark, way off that 2% target outlined by the Fed. But do you expect inflation to head towards the 3% mark sometime around November, December, or do you expect it to remain elevated around 4 to 5%, going forward?
We have a long way to go to get inflation down to 2%. That's not going to be the case. The Fed knows that, and I think eventually, the Fed is going to have to revise that 2% target. It might take maybe 2 to 3 years to get inflation down there, or unless I'm wrong about the recession and we have a severe recession, that would be different. But if we have a mild recession, it's going to take a while for them to reach 2%. I don't even know if they can attain that 2%.
Right. Peter, my last question to you. What's your view on the emerging market basket, given the fact that, the recovery in Chinese economy has been largely uneven, so to say. But Indian markets, on the other hand, have been doing pretty well. So what's your view on the entire EM basket right now, specifically India versus China?
Yeah, on the emerging markets, well, I would have to say that India is outperforming everyone, and they might actually escape some hardship. China, the numbers are very erratic, and sometimes you have to question, are those numbers correct? And so I think, as far as Chinese economy, I don't think it's going to fall apart, but I don't think it's going to be as meaningful as it was 3 or 4 years ago, pre-pandemic growth levels.
Right. It's advantage India over China. With that, thanks a lot, Peter, for taking out time and joining in and sharing your thoughts with us. Well, with that, let's shift focus to market technicals. Then joining me is Shivangi Sarda of Motilal Oswal Financial Services this morning. Good morning, Shivangi. Great to have you on the show. The Nifty, we managed to breach that 18,400 mark day before yesterday, but once again, late hour selling is something that weighed in on the markets, and we ended even below that 18,300 mark yesterday. Do you expect Nifty to take support around that 18,264 or 260 levels thereabouts, or do you expect some bit of buying to come in on dips?
Hi Hi, Nandita. Good morning. Thank you for having me on the show. We've seen that Nifty index has been gradually making its base high on a higher zone, and we've seen that even on the yesterday's session, even though it did not support its previous day's high, but it did not even cross its low levels. So somewhere support-based buying can be seen in the indices. Both Nifty and Bank Nifty. Nifty, however, is sort of underperforming, but the entire stance should be buy on decline, even now, because we do look at 18,350 on an immediate level, then 18,442 in the index, and support would be 18,181. Talking about Bank Nifty, this index has been outperforming the broader market, and we've seen resilience over here, be it the private space or the PSU space. Both the counters are both the banks are doing quite well, and we've seen that Bank Nifty is cheering near its lifetime high levels, and some sort of profit booking was seen yesterday. But the structure is still positive. It is making higher highs, higher lows from the last three sessions. So overall, buy on declines to continue even here. We could see 44,200 levels and then 44,500 over here with a support near 42,750, 43,750 levels.
Right, so that's the view on the Nifty and Nifty Bank. But let's talk about the stock of the day, Bharti Airtel. It reported a mixed set of numbers given the fact that profits have surged nearly 89% on a Q-on-Q basis. It has beaten estimates, but operating margins have also topped estimates. But ARPU, that average revenue per user, is pretty much flat at 193 vis-a-vis expectation of 196, 197 rupees. That has missed estimate. Revenues have also missed estimate due to lower India mobile revenues. Right, India mobile business has seen lower revenues. But the street view is fairly positive on the stock, given the fact that the stock has been in a, not really a big downtrend, but over the last 5 days or so, lost somewhere around 1% or thereabouts. Mixed set of numbers. How do you think the stock will react to it in today's session?
So looking at Bharti Airtel, this stock has been consolidating from the last 3 weeks, and it has not been able to surpass 806 levels from the last many days. So somewhere around this can act as a resistance level. Technically, if you ask me, we don't see a lot of momentum over here building up here, because the stock, as we can see that even though there is a little bit of support based buying, but the index is not being able to hold at higher zones. So somewhere we see a little correction, a little consolidation over here, and it is a wait and watch for me as of now.
Right, wait and watch when it comes to Bharti Airtel. Let's take up a query then. This one is coming in from Saurabh Gupta, and he wants to know your thoughts on Ujjivan Small Finance Bank. Now, the entire SFB space has been buzzing. Yesterday, we saw Suryoday Bank, hand in great set of numbers, and it did see a smart rally. And even Ujjivan Small Finance Bank surged somewhere around 3% or thereabouts. Should one look at entering into some of these counters now?
Definitely, all the banking, stocks are looking quite positive, banking, non-banking, and financial space. And this stock particularly has been continuously making, higher highs, higher lows on the weekly frame. It has been outperforming in this entire month, and it should continue to do so with a good price volume surge over here. So, recommending that we could hold and hold on to the stock for a level of 35 zones with a stop near 33.
Right. So that's the call on, Ujjivan Small Finance Bank. Let's also talk about LIC Housing. It reported its numbers, fairly good set of numbers. Profit was up 5.5%. NII was up over 20%. And, if you look at the brokerage views, CLSA has a buy rating on the stock. Target price raised to 550 rupees a share. Margins have, of course, been highest in 24 quarters. So that's a big positive. And, CLSA believes that the stock is trading at an undemanding valuation of 0.7x FY24 price to book multiple. And they've also, lifted the PAT estimate FY24, FY25 profit estimates by 4 to 18%. So looks like the stock is poised to head higher in today's session. But should one look at buying into these stocks on dips, or is it time to, go all in right now?
So talking about LIC housing, this stock has given a pole and flag pattern breakout on daily frame with an excellent price volume surge in the previous session, and even on weekly frame it has been holding on from the last 5 weeks. So pretty good buying interest can be seen and follow up buying as well. So definitely this stock can see new heights from these levels as well. Now, a very good, positive divergence can also be seen in the stock on the RSI indicator. So definitely, the stock could go up to around 410 levels with a stop near 385.
Right, so that's the call on LIC housing. Let's talk about Godrej Consumer. We have a query coming in from Saujanya, and they want to know your thoughts. The stock has done extremely well, on a YTD basis, up 13%. Numbers were also pretty good, and stock is just about 10 odd rupees away from its 52-week highs. So how is this stock looking on the charts now?
So, talking about Godrej CP, the entire consumption space, in fact, has been excellently doing well from the last 2 weeks. We saw that, from the last week of April, it did see a bit of decline, but the short covering move that we've seen in the April month so far is, quite remarkable. So definitely the stock is now recovering and moving in a quite, good manner, and we could expect around 1050 odd levels over here with a stop near 995 levels.
Right, those are the levels to watch out for on Godrej Consumer. Hope that answers your query. Let's take up a query on JK Tires. Shikhar has written in and he wants to know your thoughts. He wants to know whether the stock will cross the 220 rupee mark or not in the near term. It's trading around the 200 level. In fact, 52-week high levels are at 213 or thereabouts, just about 13 rupees away from that mark. And, if you look at the stock over the last 1 month, it has gained 22%. Up move expected to continue from here?
See, definitely the entire auto and the related space have seen a quite remarkable up move and long build up over here in all this space. In fact, talking about JK Tires specifically, this stock has also seen a very good run up. And right now, even though there has been some sort of profit booking from the last one or two sessions, but the good part is it is holding on to its support zones, which is quite positive, because the stock is consolidating in a way, and which is making it ready for the next leg of rally. So definitely we could hold on to this stock for around 207 levels and with a stop near 194.
Right, so that's the stop loss to watch out for, 194. Some queries from the media pack. Suresh Shankar wants to know whether this is the right time to look at accumulating Saregama India. This stock is down quite a bit from its 52-week highs, somewhere around 17. It has shaved off around 17% on a YTD basis. I also wanted to get in your thoughts on PVR after it reported a mixed set of numbers, and yesterday we saw a reaction coming in. Stock was down 4% during the day, but ended lower by about 2% or thereabouts. So what is your, what are your thoughts on the media pack, PVR, Z, Saregama? Any of these stocks warrant to buy, given the fact that they have come off quite a bit from their highs?
Definitely, when we look at these stocks, they have quite beaten down from a quite a long time. Looking at Saregama, this stock is continuously been trading in a downward sloping channel. So even though the stock has reached quite lows, but I would still recommend that it is not good. It is not a good time to accumulate, because the momentum is missing. So we could look out for better sectors like consumption or banking space for a good risk reward ratio over there. Now, looking at PVR, of course there was the news based decline, and even talking about the stock earlier, this has been continuously trading below its 50 exponential moving average, continuously in weakness, and range bound to negative sort of chart structure. So I would recommend we could keep our legs out of this space and focus on the better sectors which are moving.
Right, focus on better sectors compared to media right now. Let's talk about the realty space. This space rather has been buzzing with the likes of DLF, Oberoi Realty doing extremely well. And yesterday, in fact, Oberoi Realty came out with its numbers. Profits have surged over 100%, revenue up 16.8%, healthy top line. Although the operating margin has been pretty weak, we have a query coming in on Oberoi Realty on our feed. I'll just get to that person. But if you look at the stock, it's up somewhere around 4% or thereabouts over the last 5 sessions. Now that results have also been fairly good, do you think the stock is headed higher from here?
Absolutely, the entire space we've seen that there has been a good amount of run up, and the supports are gradually shifting higher. We've seen movement in DLF, Sobha, and Oberoi Realty as well. So definitely these stocks are now getting ready to consolidate over here, but then any dips could be utilized for the buying opportunity. Talking about levels, Oberoi Realty, we could expect around 1015 over here with a stop near 955 levels.
Right, that's the view on Oberoi Royalty. This query had come in from Praetorian. Hope this answers your query. Let's now talk about this stock called Polyplex. Debraj Ghosh has written in and he wants to know your thoughts on the stock with a view over the medium to long term. This stock has just come off its 52-week lows. In fact, over the last 1 month, it has done extremely well, 20% or thereabouts. Would you advise somebody to look at this stock now?
Uh, so looking at the chart structure over here, we've definitely seen a negation on a monthly basis. The stock was continuously making lower lows and lower highs on a monthly frame, and now we've seen a negation after a long period of underperformance. So definitely the stock is getting ready for a good up move over here. The risk reward is quite favorable at these levels, so we could buy at these levels with a target of near 1565 and a stop near 1475 levels.
Right. I also want to get in your thoughts on ITC. We have a query coming in from Ishu Singh. Now, this stock, ITC, it did hit a 52-week high, recently, but it's maintaining itself above that 400 rupee level, which it took quite some time to cross. But, off late, it has come under a fair bit of pressure. Do you think this dip that it's seeing is a good buying opportunity when it comes to ITC?
Absolutely. Such a stock which has been on my radar from the longest time, and the weekly, if we see, the structure is still very positive and doing quite well. Even on the daily frame, if we look at it, it is consolidating as a sort of a profit bouquet. But the good part, it did not break 415 levels, which is acting as a good support over here. So looking at 415 as a support, we could hold on to this stock for a targets of around 440 levels.
Right, 440 levels to watch out for on ITC. Let's talk about Jubilant Food. Earnings expected to come out today. Stock is, down 28% from its 52-week high. Revenues expected to grow 8%. EBITDA, however, may see a drop of 10% or thereabouts, and margins also seen coming in lower at around 20 to 21% or thereabouts. We have a query coming in from Divya as well on the stock. Earnings expected today, but stock has come off quite a bit. Do you think one should look at accumulating this one now?
Before I talk about Jubilant Food, even ITC of course comes under the consumption space, and we've seen that FMCG index is trading at its lifetime high levels of near about 49,680 levels, which is quite remarkable. And so the all the FMCG pack and the consumption space is looking so bright. So looking at Jubilant Food in particular, this stock has started to bottom out on weekly basis. But then again, if we look at the entire space, there are better stocks which are moving in momentum, and my call would be that definitely be with stocks which are trending rather than be with stocks which are not in momentum. So ITC would be a preferred pick over Jubilant Food in the consumption space.
Right, ITC over Jubilant Food. Well, that's the call. I'm afraid we are running out of time. Shivangi, before I let you go, leave us with some stock recommendations for viewers this morning.
My stock pick, the first one one would be from the banking space, which has been, the entire space has been outperforming, and we can't rule out a call from here. So I'm talking about Bank of Baroda today, which has been continuously making, higher lows on the daily frame, and excellent volumes were seen on yesterday's session, and it is coming on to its previous resistance level. So once this level surpasses, it could see a good up move towards 193 odd levels with a stop near 182. So recommending a buy here with these levels. Now my second pick would be HAL. This stock has also, been doing quite well, and on a month-to-month basis, if we see, it has been continuously outperforming from the last 4 months. Excellent chart setup, and a good, gap up opening that was seen yesterday, and the stock held on to its higher levels even, after the higher opening. So definitely a very strong setup over here, and a buy recommendation with a target near 3220 levels and a stop near 3030 levels, on this stock. Now my third pick would be HUL, which is also quite positive from the FMCG pack, and we've seen that this stock has also seen a good buying interest from the last 10 days. A very a weekly breakout, and then follow up buying can be seen thereafter as well. It surpassed its previous hurdles and holding on quite well. So definitely we can look out for accumulating these stocks over here, and we could expect some 2780 odd levels over here with a stop near 2620.
All right, Bank of Baroda, Hindustan Aeronautics and HUL, three stock picks coming in from Shivangi. Shivangi, with that, thanks a lot for taking out time and joining in this morning, and also addressing all of your queries. Well, with that, we've come to the end of this edition of Morning Trade. Don't forget to stay on, because coming up next is Opening Bell. So it's a good bye from me and the entire team that put the show together. Thanks a lot for watching.